Two people open an investing app for the first time. Same screen, same market, same promise. Your money can grow. 5 years later, one of them checks their account casually and realizes it's quietly become life-changing. The other, they've been investing the whole time, and somehow, they're barely ahead. Not because one was smarter, but because they were playing completely different games, without knowing it. That's the uncomfortable truth about investing. There isn't one game, there are levels, and the rules change every time you move up. Right now, more people are entering the market than ever before. Apps made it frictionless. Social media made it look easy. And a generation grew up watching others turn small amounts into big wins. Fast. But what most people don't realize is this. The strategies that work at level 1 can quietly destroy you at level 5. And the behaviors that look boring early on become unfair advantages later. So instead of asking, what should I invest in? A better question is, what level am I actually playing at? Because once you see the levels, you can't unsee them. Level 1 is where almost everyone starts. Survival investing. You don't have much capital. Your income is unstable. And your biggest risk isn't losing money in the market. It's needing that money tomorrow. So your decisions aren't really about returns. They're about flexibility. You keep cash. You avoid risk. You might save. But you're not truly investing yet. Because at this level, liquidity is everything. A 10% return means nothing if an emergency wipes you out. And that's the first quiet rule. Before you can grow money, you have to survive without it. Level 2 feels like progress. You finally start investing. Maybe it's stocks. Maybe it's crypto. Maybe it's whatever is trending. You hear stories. A friend doubled their money. Someone online turned $500 into $50,000. And suddenly, patience feels like losing. So you chase. You buy what's moving. You sell when it drops. You refresh your portfolio like it's a scoreboard. This is where most people think they're investing, but they're actually trading attention. And the math here is brutal, because every emotional decision compounds in the wrong direction. Small losses stack. Fees eat quietly. Timing mistakes cancel out gains. Doesn't feel like losing, but 5 years later, the numbers don't lie. Level 3 is where things slow down. Not because the market changes, but because you do. You realize something uncomfortable. The market isn't chaotic. You are. So you start simplifying. Broad index funds. Consistent contributions. Less reacting, more repeating. Feels boring. Almost too boring. But that's the point. Because now you're playing a different game. Time. And time is strange. In the beginning, it looks useless. Returns feel small. Progress feels invisible. But underneath, something is building. Momentum. And most people quit right before it becomes obvious. Level 4 is where compounding starts to show itself. Not dramatically. Not overnight. But enough to change your behavior. You check your portfolio and realize something strange. The market made more money for you this year than you added yourself. That's the moment the game shifts. Because now your money is working harder than you are. And that's both exciting and dangerous. Because it creates a new temptation. To speed it up. To take more risk. To optimize. And this is where many people fall back down. They abandon what worked. Right when it finally starts working. Level 5 is where capital changes your options. You're no longer investing small amounts. Now you have something meaningful. And that creates a new problem. Preservation. At lower levels, risk feels like opportunity. At this level, risk starts to feel like threat. A 50% gain is nice. A 50% loss is devastating. So your mindset shifts again. You diversify more. You think about downside. You stop asking, how much can I make? And start asking, what can I afford to lose? Because now the goal isn't just growth. The staying in the game. Level 6 is where investing becomes strategic. Not reactive. Not passive. Intentional. You start thinking in systems. Tax efficiency. Asset allocation. global exposure. You realize something most people never consider. It's not just what you earn, it's what you keep. Two investors can make the same returns, but one quietly ends up with far more. Not because they took bigger risks, but because they understood structure. At this level, complexity increases, but so does control. Level 7 is where access changes everything. You're no longer limited to public markets. You see opportunities others don't. Private deals, early-stage investments, real estate at scale. You're not just buying assets, you're negotiating them. And here's the strange part. The best opportunities at this level don't look like opportunities at all. They look illiquid, boring, hard to access, which is exactly why they work. Because most people can't or won't participate. And that's the hidden advantage. Exclusivity. Level 8 is where the game becomes abstract. It's no longer about making money. It's about moving it, protecting it, positioning it across time. You think in decades, not years. You think in generations, not portfolios. Risk isn't measured in percentages. It's measured in scenarios. What happens if currencies shift? If markets freeze? If systems break? At this level, investing stops being about returns and starts being about resilience. Because the more you have, the more you have to protect. Now here's the uncomfortable part. Most content about investing lives at level 2. Fast gains, hot picks, short-term wins. Because it's exciting, it's easy to understand, and it sells the dream. But the real game, it gets quieter as you move up. Less visible, less dramatic, more disciplined. And that creates a strange illusion that nothing is happening, when in reality, everything is. The irony is almost perfect. At the beginning, you want action. You want movement. You want proof. But the higher you go, the more success starts to look like inaction. Holding, waiting, letting time do what effort can't. And that's deeply uncomfortable, because it goes against instinct, against emotion, against everything that feels productive. So when two people invest the same amount and end up in completely different places, it's rarely about intelligence or luck. It's about alignment, playing the right game, at the right level, with the right expectations. Because if you try to play level 7 strategies at level 2, you'll lose. And if you stay stuck at level 2 behaviors, you'll never reach level 4. The market doesn't reward effort. It doesn't reward activity. It rewards consistency, over time, within the right framework. And that framework changes as you grow, quietly, gradually, until one day, you're no longer thinking about investing at all. You're thinking about systems, structures, and time horizons that feel almost unreal. So the real question isn't, what's the best investment right now? Is this, what level are you playing at? And are your decisions actually designed for that level? Because the most expensive mistake in investing isn't losing money. It's playing the wrong game for years without realizing it. And by the time you do, time, the one thing you can't compound twice, is already gone. And maybe that's the part nobody likes to admit, that the biggest advantage in investing isn't information, or access, or even capital. It's awareness, seeing the level you're on, and having the patience to play it properly before trying to move up. Because once you understand that, the game doesn't get easier, but it does get clearer. And clarity changes everything. So the next time you open your investing app and feel that urge to act, to buy, to sell, to do something, just pause for a second and ask yourself, is this move helping me win the level I'm actually in? Or am I chasing a game I'm not ready to play yet? Because the answer to that question quietly determines everything that comes after.